Hi guys, so last week I finally hit my goal of beating 99.5% of traders on Binance. Now typically I personally sit around 99.2 to 99.4% most 7-day, 30-day, 90-day periods in terms of asset increasing rate. But last week has been one of my most exceptional trading weeks, and by popular demand from people I've met in real life, through my discords and so on, have asked what strategy I use and how I manage to get such great returns. So I thought in this video right here, I will talk about my exact strategy and how I trade. Now, firstly, if you have absolutely no idea what you're doing or you're just a beginner, I highly recommend following these channels on the left of my screen: Jason Pizzino, Michael Pizzino, Traders Helping Traders, and Bravos Research. Now, I am a member of TIA Investor as well as Traders Helping Traders. I was a member of Bravos Research, and I still think they do some really great stuff. But for me personally, I just don't think their trading style matches what I do, because they're doing, let's say, not as many trades as I want to be doing. Like, I spend a lot of time in front of the screens, and what they're doing is they're doing a couple trades per year, but they're holding it for, weeks, months, and it goes pretty well. And obviously, some people prefer that, and I still highly recommend their community. You'll definitely get your money's worth out of it. But with that out of the way, let's jump over to the charts. Now, I highly recommend following Peter DiCarlo on X, because he makes some really great free calls for stocks, and I will be using a stock for this example, and as to how my technical analysis works, but I will definitely use a crypto for an example in a later video. Now, right here we have Rocket Lab, and as you can see here, I am starting on the monthly chart. Now, the reason I'm using the monthly chart is because most of the time, stocks that we'll be trading, we're not really concerned on what happened, 20, 30 years ago. So we're not really going to need to be looking at a quarterly chart or a yearly chart. But the monthly chart gives us a really great overview of how the stock behaved, this cycle as well as the last cycle. Now, if you're wondering what I mean by cycles, I will potentially explain that in a later video, but for now, just take my word on it, and for most stocks, we'll start off on the monthly chart. Now, what indicators do I use? I use volume. Now, this is a free indicator by TradingView. So you just have to type in volume, and it's going to be the one that is not by any author, because obviously it's by TradingView itself. The second indicator I'm going to use is called the market bias. Now, I'm not going to explain exactly how this indicator works, because if you go over to Peter DiCarlo or Traders Helping Traders and you go through his links, like visit community, sorry, not like that, but if you go to one of his videos,
United Health is up,
and we go down to here, Capitalist Academy, he will show you how to use the indicator. So I'm not going to waste like 20 minutes of your time explaining how this indicator works. The other indicator I've got on the screen is the TIA GAN swing indicator. Now, this indicator is a paid indicator. It is not free, but if you get it if you head over to TIA Investor by using the real links in the description of either Jason or Michael Pizzino's YouTube videos,
had a view.
and we go over here to TIA Investor using official links, because there's heaps of scammers on the internet, and we go over to indicators here. We can go to indicator suite, which will take us over to this page here. Now, this is typically $1,000 a year, but it's down to $400 a year for the next 3 days. So please take advantage of this offer. Now, obviously, once you sign up, you'll get, guides on how to use it, emailed to your inbox, etc., etc. So I'm not going to explain how this indicator works, but I am using bars on my chart instead of candles. Now, sometimes I use candles and sometimes I use bars. I find candles easier on shorter term time frames, like maybe a 15-minute chart, a 1 hour chart, or something like that. But on really high term time frames, like a weekly or monthly chart, I do prefer bars. Now, I can probably do a video, or you can jump on the internet and, do your own research about, what's better, bars or candles. Or you can sign up to TIA Investor, TIA Pro right here, where there's a bunch of courses that will explain how bars work, and obviously some more in-depth analysis on the TIA Gann swing indicator beyond what you'll get emailed to your inbox if you just buy the indicator. Same with volume down here. TIA Pro has a bunch of courses, and I'm not sure if they have a volume course specifically. Yes, they do. Sorry, no. That volume course is only for TIA Elite, where you're going to need a invite to it. You guys missed the deal with TIA Premium, which was cheaper and had all the courses. But even if you can't get that volume course in TIA Elite, you can still, jump online and do some of your own learnings. And pretty much, they're my three major indicators. Another indicator that I like to use is called the BX Trender, if I can even spell. There we go. It's by this one, Puppy Therapy, Quant Therapy. I actually already had it there, but anyways. So I use these indicators in conjunction with each other on the monthly time frame. Now, I also like to use the stochastic RSI with divergences. So here we've got stochastic RSI. Again, it's a TradingView indicator, but we want to use with divergences. So this is the one by neobutane. Now, why do I use with divergences? This is because the stochastic divergences on the RSI can actually be used to identify tops, bottoms, major tops and bottoms where the trend is likely to reverse, or intermediate trends and bottoms where the trend is likely to continue in the previous direction. So if you get... Now, I'm not going to talk about divergences in this video, but I highly recommend a guy called Cowboy Trades. Now, old mate here is pretty much retired because, well, he bought Bitcoin down at 16K when everyone else was calling for 5K Bitcoin. And he has a playlist here called an educational series where there is one that talks about divergences. I will let you potentially find that one yourself. There we go, 27 and 28. And that will teach you how to use the stochastic RSI. Now, a lot of people like to use divergences on the MFI or RSI rather than the stochastic RSI. I prefer the stochastic because it gets you that little bit closer to the price action. And if I'm looking for an indicator that is a bit further from the price action, but gives you a more reliable signal, then I just look at the BX Trender. Now, Jason talks about that in his videos a lot, as well as Michael, where you get two types of traders. Now, I'm going to use the BX Trender as an example. I'm going to jump over to the weekly time frame here. Now, the two types of traders are going to be the buy the dip trader, where you'll try to buy in at the first sign of a bottom. Now, in some cases, that will get you, the exact bottom. And in other cases, you can have a buy the breakout trader, where you'll wait for confirmation of a bottom So in this case, instead of buying in on this week close at $19.40, you'd be buying in on this week close at $23. Now, what does that get you? Now, obviously in an uptrend, you'll be paying a higher price, but it keeps you out of potential false signals. Now, if we have a look at something here, you would have bought in at $4.92, but you would have sold back out at $4.37 because the low was not in. Again, you would have attempted to buy at $4.54 and sold at $4.40 because the BX trender went from higher low to lower low. And then again, you would have bought in at $3.78 and you would have snapped a bottom that time and held that until you got a sell signal. Or you could have waited all of that out and just bought in at, $4.07. So in this case, you probably would have bled more money trying to time the bottom through here than if you just waited for the breakout. But in this case over here, you would have, gotten in at a much nicer price and just been able to ride the trend up for longer. Now, that brings me to my next tip, is trying to figure out exactly what sort of trader you are. And I will do some other videos about this, looking at shorter term timeframes. But pretty much on the higher term timeframes, that's just the two types of traders, really. Like, do you want to buy in this week and potentially have to get out next week? Or do you just wait for a confirmation and you don't mind paying a higher price? So would you rather take, 3% losses before you snap the exact bottom and ride that 100% breakout? Or would you rather wait for the confirmed move up and only be able to ride 50% of it? Anyways, once that is sorted out, on the monthly time frame, what I'm looking for... Sorry, I'm kind of jumping all over the place in this video. What I'm looking for is an uptrend. Now, I personally don't like to be buying into stocks that have a really, really ugly structure. Now, if I don't even have a chart for that, but if we have a look at something like Cadena. Now, this is a crypto, and I think it's been delisted on most places. But yeah, so I don't really want to be buying into something that's like this, where many years ago, it had a really nice strong move, but ever since then, it hasn't really been doing much. Now, I want to be looking at something that's in a pretty strong uptrend, but not something that has, been in such a parabolic uptrend that you're buying into an extreme premium. Unless, I don't want to be buying right into the tops. So I want to be buying something that's in a pretty strong uptrend, not a downtrend, but at a discounted price zone. So how am I going to get that discounted price zone? Well, if I jump down to a shorter term time frame, such as a weekly chart, I'm going to look for a significant low, such as this April low in this year when Trump crashed the markets, to a significant high, such as this October high, right where, Trump crashed the markets again. Now, here I'm using the Fibonacci retracement tool, which is free on TradingView, which you can get here. So I'm on a Mac, so I can also access it by using Command F. And you can clearly see, in this case, we have busted through the 50% level, which if you watch Jason and Michael videos, you'll understand how important that is. But we have quickly gotten back above it. So buying at, say, $44, you would have, again, been trying to buy the dip. So you would have had to hold that position out to $37. And, now you're back in a profit. But that would have also meant you would have had to have, say, an invalidation. So potentially your invalidation would have been, if you were saying if you get, let's say 3 weekly closes underneath $38, you're going to sell for the loss regardless of what price it is. And these things you're going to have to, learn yourself. What sort of risk you're willing to take, how much of your portfolio you're willing to put into each trade. Obviously, you can get like a financial advisor to help you, but you can also kind of figure it out yourself, which is what something like TIA would really help you with, as well as the Traders Helping Traders community. If you go into one of his video descriptions, all these communities, they're not giving you financial advice. They're not saying if you have 100K and you have XYZ liabilities, do this and that. Only a financial advisor can tell you that. But what they're doing is they're showing you how they manage risk, and you can potentially apply that to your own situation. Anyways, the other thing you can do is take this this retracement tool and bring it back to a lower low. So since we busted through the 50% of the April low, we'll take it back to the August low last year when Trump didn't crash the market. It was the Japanese yen carry trade, whatever. Now, if we look at this 50% level, we bounced off it to absolute perfection. And if we apply our chart analysis here, we can also see a nice double bottom. Now, double bottoms, double tops, all these chart patterns, you can learn them with a website such as Investopedia, or you can use the free TradingView indicator, which in this case hasn't identified anything, but this is a great beginner tool, and I used it for about a year after I first started trading, and it taught me, how to identify patterns. Like now I can just eyeball a pattern, but for the first year when I was starting out, I couldn't do that. Now, I don't think it's actually free. I apologize for that. I do believe you do require a TradingView Premium subscription for that, which you may have just missed the Black Friday discount, but it's still amazing. And anyways, on to my next level of analysis. So you can see this market bias here, which sort of serves as like a EMA, moving average, bull market support band type of thing, where you want to see price on top of it for a nice bull market. However, when price is really far away from it, you're in, a premium range, an overbought range. And that's where you want to be looking, potentially taking profits rather than buying. And that's what sets, good traders from, I guess, bad traders or experienced traders away from new traders. A new trader will see, oh my God, it's been up, 100%, 1,000%. I need to buy now for it to run another couple 100%. But what they don't realize is, if you are buying all the way down here, like you being an institution, which is what Traders Helping Traders talks about in his free and paid courses. If you bought $100 million here, would you buy another $100 million here, or would you sell it, wait for it to come back, and then buy? And in this case, is why I have these Fibonacci zones. Now, if we have a look here, and I'll potentially use, I don't think this is the best chart to be using, this Fibonacci, so we'll potentially find a slightly better chart if I have one available. CleanSpark, there we go. So if you take a fib retracement tool from a significant low, in this case the bear market low, to the current bull market top, you'll get a zone which is a 786 to 826 Fibonacci, and without taking his multiple hour course, I'll just give you a quick rundown. And this is basically, TradingView only has a 786 fib set up for you. You have to manually add the 826 fib, but this is basically where institutions will step in because they're getting an 80% discount. So if you bought, $1 billion at $2 and sold, $1 billion at $20, you would have actually sold $10 billion. But you could then take your profits and buy back in at $6 for an 80% discount for this next leg up. And this is what this Fibonacci zone is telling you. So potentially, for the next major cycle, if we lose the 50% level, we'll potentially be looking for support down at this level. But in this case, we've bounced off the 50% level, which is a nice, strong sign that the trend is going to continue. Now, another massive tip I have for beginners is look at what other reliable pro traders are doing, like the ones that I've mentioned. You don't just want to be following some random moon boy on X or YouTube that's just going to give you up-only garbage with, curve-fitting data rather than looking at it from an actual perspective. So, even if you pay for signals by subscribing to, his X Premium, I think it's worth it. Because when you look at other people's, or other real good traders, not wannabe good traders, signals, and you start to see, what is he or she seeing that I'm not seeing? And over time, you'll eventually be able to see them yourself in the charts. I know so many people hate copy trading, especially, Jason and Michael. They're not big fans of copy trading, but I'm saying, if you are just starting out, it can be really good for you to start learning, provided you're actually putting in the time and effort to go, why did he take this trade? Why did he enter here? Why did he close out here? And not just being, oh, I should buy this now. Oh, they're closing now, But anyway, once, we look at a weekly chart, we would then come down to a daily chart. And you can clearly see here, the daily chart, looks good. And one more thing I want to say is you can have a monthly and weekly chart that is in a bullish structure, but a daily chart here could be running into resistance. So, this is a market bias. And if you have a look here, if we run into the market bias from below, sometimes, we snap right back above it, but sometimes we might reject, pull back, attempt again, reject, pull back. So what could happen is the daily trend is technically still down, even though the Gann swing indicator has turned up on the 1 bar, it hasn't on the 2 bar and 3 bar, which means we could still pull back here, which is something you need to understand. If you bought, a whole heap at $39 and you want to sell at $49 to try and buy back at $45, you could do that. But the price could also just cut right through and keep going and not give you another chance to enter, which is what brings me to my next point. You want to get your short-term trades and your long-term trades separated. So if I bought, a bunch at this 50% level at $39, using, a weekly time frame signal in this case, and bounce off a 50% level, I'm not going to sell that position unless I have a reason on the weekly chart to sell, which on the BX Trender would be a dark red weekly close. Or, on the TIA Gann swing indicator, that might be 7 or more bars in one swing direction, which typically leads to a major reversal. So that's something a lot of people don't understand. They buy in a trade. I see a lot of people do this. They buy into a trade, on a weekly or monthly time frame signal, and they go, oh my god, the daily chart, is running into resistance. I've got to sell everything now. No, it doesn't work that way. But anyway, that is how I trade on stocks. It's really, really simple, my stock market analysis. I make heaps and heaps of money off the stock market using pretty much just the Gann swing indicator, the BX Trender, and the market bias, as well as the Fibonacci's that I talked about. Now, I don't really talk about volume in this video, but I'll potentially talk about it in my next video because this is going on for a bit too long. But thank you all for watching, and please like, comment, and subscribe.